Why is Google down 10% today after they had a blowout quarter and everything looked so good relative to their induction and building out their AI program? Why are they down 10% and probably will go down another 10% in first quarter of 2024? If you'll listen to Ruth Perot. Who's Ruth Perot? She is the CFO of Google. And in the last minute of her presentation in the earnings call, and if you aren't listening to these earnings calls, you're flying blind. Let me share with you what Ruth said, because it'll tell you exactly why it's down 10%, and no one else is telling you this. Finally, our reported CapEx in Q3 was $8 billion, driven overwhelmingly by investment in our technical infrastructure, with the largest components for servers, followed by data centers, reflecting meaningful increases in our investment in AI. The growth reported cash CapEx for Q3 is somewhat muted due to the timing of supplier payments, which can cause variability from quarter to quarter. We continue to invest meaningfully into our technical infrastructure needed to support the opportunities we see in AI across Alphabet, and expect elevated levels of investment increasing in the fourth quarter of 2023, continuing into 2024. What she just told you was that they spent 12% of their revenues last quarter into rebuilding the infrastructure of their ability so they have the ability to deliver you AI. And most of that is going to their data centers. They also said it's going to elevate in fourth quarter 2023 and first quarter 2024. That's why the stock's down 10%. That's why you should be listening to these earnings reports. Let me get into this a little bit deeper, but you need to understand this if you want to invest in any stock. You need to understand their financials. We'll get right to that because I need to share with you, this is not financial advice.
Best of Us Investors presents Kerry Griegmeyer.
I've got to admit to you, I have been in this investment business for most of my life, and basically I followed the hopes and dreams of the world as to what these big companies are going to do to make our lives better. And then over the last, I would say 6 months, I woke up and said, I need to buy those companies the same way as if I was buying a company here in Birmingham, Alabama. I would look at their books, I would understand their books, I'd talk to their CEO, I'd talk to their CFO, I'd talk to their marketing director, and I'd understand what I'm buying. And I just don't see how you can do that if you don't listen to the earnings call, because you're not going to be able to go to Google's headquarters and sit down with their CFO and the CEO and the head of marketing and get answers. So the next best thing you can do is sit in on their earnings call and just sit there and listen, and then go find their income statement and their balance sheet, because you've got to know that what their publicity department is going to put out is what they want you to know. But you've got to listen carefully. Again, in this Google call, it's an hour, but the sum total of what is really going on comes from Ruth Perot, both in the end of her presentation and then in the last question that she is asked in the presentation. So it's a 58-minute presentation, and Ruth tells you everything you need to know in 2 sentences and 2 deliveries. So whatever stock you're investing in, and I know a lot of you invest in Tesla, and if you didn't listen to Tesla's earnings call, you don't have a clue of what's going on. These people are dealing with increased interest rates, increased cost of doing business. Heck, Google spent 40% of their net income the $8 billion they spent on rebuilding their infrastructure, rebuilding their data centers, 40% of their profits went to that. And then she explained that that's not really the real cost because some of the people were late in delivering to us. So the actual payout didn't happen in the quarter that the expenditure really took place. So she said it will be escalated as we move into fourth quarter and first quarter of next year. That's why the price of the stock is down 10%. And if you don't know that, then you can't be a wise investor. Okay, so I want to share with you the second thing she said. She was asked a question. It was the last question of the 58-minute presentation. And here is what she said. I was trying to make a point that we are committed to meaningful investment in CapEx, that's capital expenditure, given all the opportunities we see. We do continue to expect elevated levels of investment in our technical infrastructure. It will be increasing in the fourth quarter and talked about some of the differences in timing. Muted timing in the third quarter due to timing of supplier payments, and then we try to make it clear that we will continue to grow CapEx in 2024, or more specifically to your question, 2024 aggregated CapEx will be above that of full year 2023. So she basically said, we just spent $8 billion. We probably, and I'm interpreting, that should have been more than $8 billion, but they were late in billing us, and that number will grow in the next 2 quarters and into 2024. So that tells you their price is going down. So what did I do? I went and looked. What's the next level? Where's it going to settle in the next 2 weeks? And I entered a good to cancel order for about 25% what I own. Then I went and I looked at their graph, their pricing charts, and I interpreted where's the bottom of this, because she just told me it's going to be worse, not worse, but a bigger number come the next quarterly report, and then an even bigger number the next quarterly report. Well, how are they going to offset that with earnings growth? They aren't. They do tell you elsewhere that we anticipate that we will create a subscription service, which I told you about a month ago, wrapped around AI, which will basically say we're going to deliver a package to Kerry, a small businessman, who will pay us $30 a month or $60 a month to give him the ability to deliver a better product to his customer. And that will create us a subscription service, much as Amazon has with Amazon Prime. And that's where they're going. Okay? But they got to get there first. And then what I've been beating the drum about also, as they do invest this additional $8 billion and they have to borrow the money to do it, the cost of that money is 3 times what it was a year and a half ago. So these people are going to be profitable. What we need to do is recognize the cost of this future profits has to be endured right now, and it has to be endured at a higher interest rate, a higher cost of debt service. These are givens. So what we need to do is understand this. Understand that the profits are going to come in the future, but then calculate where are the tiers as the market wakes up and says, "Oh, Google's not as profitable as I thought it was. I better sell my stock. I better get out of this." Because the other thing you got on the equation here is we're involved in 2 and possibly the third war, and that all you need is some major event to throw panic into this market, and these things are going to drop. But we know the future is bright. So our challenge is, where do we buy in? We're not going to try to catch the falling knife, because we'll get cut with that. But what we are going to do is dollar cost average in as they go down, and they will be going down. Okay, I'm Kerry Grinkmeyer. I'm a retired financial advisor. I'm working with Trent and Mark to help you make better investment decisions. And the best way I can do that is share with you where I'm buying. And what I just did this morning, before I shot this video, I went on to my Discord, that's part of our program, and I told them the exact price and the number of shares that I'm buying at Google probably within the next week. And then I will tell them, okay, this is our next level of entry because it will go down further, okay? And that way, even if something happens that turns it around, at least we're dollar cost averaging into this falling knife, okay? Kerry Grinkmeyer, retired financial advisor. I'm loving this. This is what I do for enjoyment. I spent 3 hours this morning listening to the call, researching, informing my tribe, my members of my Platinum and my Premium Plus. This is where I'm buying. Watch the video. I told them, watch the video tomorrow, and you'll get a full explanation. Talk to you again tomorrow, hopefully.